So our topic for today is your introduction to partnership accounting. So in your introduction to partnership accounting, what we need to learn, of course, is first the definition of your partnership, and then we will go into your characteristics of a partnership business, characteristics of partnership business, and then we look into the advantages and disadvantages of a partnership business. We also talk about your kinds of partnership, kinds of partnership, and then we talk about your classes of partners. So our topics for your partnership accounting will only revolve about these items. So definition, characteristics of partnership business, advantages and disadvantages of a partnership business, we have your kinds of partnership and classes of partners. But before we go further, we need to remember again the three main types of business. So that can either be a sole proprietorship, partnership, or a corporation. So we're done with your sole proprietorship, and we already learned if that sole proprietorship is within the servicing business or in the merchandising business. For your partnership, this will be our topic this finals, and your corporation is also our topic in finals. So partnership and corporation for finals. Okay, we start now formally with your partnership. So what is a partnership? Your partnership is defined in your Civil Code of the Philippines. So the partnership definition is provided by the Civil Code of the Philippines. And how does your Civil Code of the Philippines define partnership? It is a contract whereby two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. Okay? So, Civil Code of the Philippines define partnership as a contract whereby two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. So, we need to break down first this definition before we go forward. Okay, so it is a contract. So, when we say it is a contract, there must be a meeting of the minds between the parties. So, this partnership must be embedded in a partnership contract. Okay. Sir, what type of contract? It should be written or not? Actually, our law provides that our contract can either be oral or written. It can be oral or written. It depends as to the value of the amount of the investment. If that's 5,000 or more, it must be written and registered to the SEC. Sir, what is SEC again? Securities and Exchange Commission. So what we do is we need to register the partnership to the SEC in case of that particular amount of investment. So when we say partnership contract, it can be oral or written. So that contract is entered into by two or more persons. Some textbooks says that this two or more persons means 2 to 15, 2 to 15, but actually it is not 2 to 15 because the law provides that more persons. When we say more persons, it does not specify the number of partners. So, sir, can it be 300 partners? Yes. 100 partners? Yes. 1,000 partners? Yes. Because here in our law, it provides that it must be two or more persons. And when we say more persons, it does not specify the number of partners. So it is unlimited as to the number of partners. Next, to bind themselves to contribute money, property, or industry. So these items are the contribution of the partners. So we have here a partnership contract entered into by two or more persons. These two or more persons are known as your partners. Now, these partners will either contribute what? Property, money, property, or industry. So it will contribute either money, property, or industry. So when we say money, the partner will contribute cash, property, non-cash. That can be your property, plant and equipment, inventory, anything that is non-cash. And your industry, this pertains to the work or the talent or the industry itself of the partner. So dito, malalaman na natin agad kung anong type of partner siya. Pagka nag-contribute siya, ang tawag sa kanya ay capitalist partner. So pag nag-contribute siya ng money or property, capitalist. Pagka industry lang yung binigay niya, industrial partner. Okay? So, yan. Ang contribution ng ating partners. It can be money, property, or industry. And take note, it will be placed on a common fund. So when we say common fund, it is not the partners who owns the money or property, but it is owned in common. It is owned in common. So when we say it is owned in common, it is owned by the partnership. Sir, what then represents the interest of the partners? So maybe ang tanong nyo na dito, kasi sabi natin, tong money or property, mapupunta yan sa partnership. So it is owned by the partnership. It is not owned by the partners. So what is owned then by the partners? The partners has only an inchoate right, meaning it is not an actual right over the property. So it is a mere expectancy. Okay, so it has an expectancy which is equal to your partnership interest. Sir, what is a partnership interest? This partnership interest is known as your, normally it is the percentage of ownership, or sometimes it is your profit or loss ratio. So for example, we have three partners. So we have A, B, and C. A owns 25, this owns 40. So 35% for C. Okay. So here, we said that the money or property is owned by the partnership, and the partners has only an inchoate right or an expectancy over the partnership property. And how do we compute for that expectancy? That is the partnership interest over the partnership capital. So if ever we have your partnership capital from the total capital, how much is the share of the partner? It is based on its profit or loss ratio or its percentage of ownership. So normally, it is presented in percentage form or in a ratio form. So sir, how about if it's in ratio form? If it's in ratio form, it can be 3 is to 3 is to 4. So 30% is to A, 30% is to B, and 40% as to C. So it can be in percentage form or it can be in ratio form. Sir, what if it is more than 100%? Because actually, we should look into the partnership assets as 100% only. So what if, sir, it is 4 is to 5 is to 6? So that is already 15. It is more than 100. It's either 10 or 100 lang kasi, di ba? So dito kasi 15 lang siya. So what do we do then? We need to get for the ratio over 100. So we get the total ratio. So this is 4 plus 5 plus 6, 15. 15, right? So we have 4 over 15, 5 over 15, and 6 over 15. That's how your ratios and percentages work. So again, we will only cap it at 100. If it's more than 100, you need to translate it to 100% by getting the total and then get the amount. So 4 over 15, 5 over 15, and 6 over 15. Okay? So when we say again common fund, the partnership assets, meaning the monies and the properties, is owned by the partnership. So it is placed in a common fund. And this common fund is known as your total capital. Now, for your total capital, what we do is we get for your partnership interest. So that partnership interest is either provided in percentage form or in a ratio form. Okay? Next, we have here with intention of dividing the profits among themselves. So this with intention of dividing the profits among themselves is the goal of the partnership. So again, as I told you in your partnership operation a while back, so if ever we have your partnership operation, we earn profit or a loss. This profit or loss should be distributed to your partners. Sir, how do we distribute the profit or loss to the partners? Again, you distribute it through your profit or loss ratio. Sir, what if there is no profit or loss ratio? How should we distribute it? If there is no profit or loss ratio, what happens now is we have the different rules as to their capital contribution, or if ever there is a loss ratio, etc. We will learn that as we go through in your partnership. Okay? So again, we go back to the definition. Partnership is defined as a contract whereby two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. So two or more persons mean, again, any number of persons. What can they contribute? It can either be money, property, or industry. And that money, property, or industry will be placed in a common fund, meaning the ownership over these monies or properties is already transferred to the partnership and it is not owned by the partners. And it is not owned by the partners. So what does your partners own? It is only the ownership interest or the inchoate right over the partnership's property. And then, what is the main purpose? That is to divide the profits among themselves. So it can either be a profit or a loss, and we distribute it to the partners. Okay, we go now to your characteristics of a partnership. So what are the characteristics of a partnership? So first, it is based on contract. So when we say based on contract, it the partnership is based on the agreement between the parties. It is based on the agreement of the parties. Kaya nga dun sa ating definition, by the contract of partnership, two or more persons bind themselves. So it is based on your contract. So it is contractual in nature. Next characteristic, it is an association of individuals. Why is it an association of individuals? Because it is composed of two or more persons. It is composed of two or more persons. So it means, guys, that uh, it can compose as much as individuals it can be. Because yun nga, more persons here mean any number of persons. So they can be associated to each other, these partners. We call that your characteristic of association of individuals. So, of course, this partners has rights and obligations towards each other. So, association of individuals. Next, we have your ease of formation. Okay. So why is of formation a characteristic of individual? Because guys, a contract again is completed just by meeting of minds. So once na nag-agree na sila, we call this one consent, you can already create a partnership. So there is an ease of formation because by mere agreement or by mere consent or by mere meeting of minds, you can already create a partnership. So ease of formation. Next, we have your co-ownership of partnership property. Okay. So remember the concept of a common fund. What did we say? That the assets of the partnership is owned by the partners. It's owned by the partners. So there is a common ownership between the partners. We call that one your co-ownership. Co-ownership. So they are co-owners over the property. And when we say what is their interest as to that property, it is based on their capital interest. It is based on their capital interest. Next characteristic, mutual age, mutual agency. So what do we mean by mutual agency? So when we say mutual agency, the partners are agents of the partnership. And normally when we say mutual agency, it is based on trust and confidence. It is based on trust and confidence. Sir, why is it based on trust and confidence? Of course, you don't want to have a partner in which you don't trust. So you only accept a partner in the partnership in which you trust that particular partner. So here in your concept of mutual agency, each partner is an agent of the partnership, which means that in case the partner acted in behalf of the partnership, it binds its other partner. So all other partners are bound by the act of one partner because the partner is an agent of the partnership. So when we say agent of the partnership, again, that partner represents the partnership. So any act of that partner in lieu of the partnership will bind the partnership business. Mutual agency. Next, we have your income participation. Actually, it is not only income, it can also be a loss participation. So again, your partnership business, the partnership business, will divide the profits to the partners. So the loss or the profit will be divided to your partners. Income participation. Next, limited life. So why does your partnership has limited life? So it has a limited life because it can easily be dissolved. It can easily be dissolved. So what do we mean by easily be dissolved? So the partnership life, again, a partnership, remember, a partnership is created by the association of two or more individuals. So if there is a reduction or an addition on these individuals, the partnership of these two or more individuals ends and a new partnership starts with the reduced partners or with the added partners. Okay? So the old partners is terminated and a new partnership with the new partners is born. But again, when we say limited life, this pertains to the relationship of the partnership or relationship of the partners. So in a partnership contract, normally whoever are the parties in this contract are only the partners. So in case we reduce them or we add, there will be new partnership contract. Then this will give rise to another partnership. So the partnership here, the old partners is already dissolved And we have a new partnership that is here with the new partners. So here we look as to the limited life of a new part of the old partnership, because it can be changed with the new partnership by just adding or reducing the partners. How do we add again your partners? By admission. How do we reduce your partners? That can either be by withdrawal, by retirement, or by death. Okay? So limited life because it can be easily dissolved, because once there is a change in your relationship of the partners, it will now terminate the partnership contract and it will give rise to another partnership contract which now embodies the new partners. Okay? So the old partnership contract will now be terminated and a new partnership contract is entered into with the new partners, which now gives rise to a new partnership. So this limited life pertains to the contract of partnership. So it can always change because of the dissolution, either through reduction or addition of partners. Limited life. Next, we have your assignment of partnership interest. So you already know what is a partnership interest, right? So that is the capital interest of the partner over the partnership. So that assignment of partnership interest means that the partnership, the partner can assign its interest to other persons. So here kasi in your limited life, what happens is we have here your partnership contract with A, B, and C. If you add one, let's say D, this will result to a dissolution, right? This will result to a dissolution. So what we have now is a new partnership contract, A, B, C, and D. So what happens in a assignment of partnership interest? So we have A, B, and C. If C will assign its interest to D, if C will assign its interest to D, what happens here is it will still remain the same partnership contract. Okay? So what is only assigned is the ownership interest. So what do we mean by ownership interest? Ang partner pa rin ay si C. Pero lahat ng profit, including the capital, is owned by D. So what happens here? C will assign its ownership interest to D. C here is the partner. C is the partner. We call C as the assignor. C will assign it to other person, let's say D. D is known as the assignee. So what happens here in your assignment? There is no dissolution. There is no dissolution. There is a mere assignment. So take note of this. Assignment does not dissolve partnership. Assignment does not dissolve partnership. Only your admission, death, withdrawal, and retirement dissolves partnership, while assignment does not. So what do we do in your assignment? Your partnership interest is given or assigned to one person, and that ownership interest pertains to the profit and capital. But the partnership contract will not be changed. C will still remain as a partner. And D and D here will remain as mere assignee. Will remain as mere assignee. So we just finished discussing the different characteristics of a partnership. So again, we go back. We had your based on contract. So we said a partnership is based on a contract, and that is based on an agreement of the parties. There is an association of individuals because it is composed of two or more persons. There is an ease of formation because it can be formed through the meeting of the minds or through consent of the partners. There is a co-ownership of partnership property because again, the partnership property is placed to a common fund and that common fund is co-owned by the partnerships or the partners. We have your mutual agency, which means that the partners are the agents of the partnership, and the act of one partner in lieu of the partnership binds the partners. So mutual agency because it is based on trust and confidence also. You also have your income participation because there is a distribution of profit or loss. There is a limited life because again, your partnership can be easily dissolved through your reduction or addition of partners that can either be through admission, withdrawal, retirement, or death of a partner. And then there is also an assignment of partnership interest in which there is no dissolution. However, the ownership interest of one partner is assigned wholly or partially to one person called the assignee. Okay, so there is no dissolution in assignment, but dissolution can only be effected through the different modes. That is your uh, admission, retirement, death, or withdrawal. We go now to your advantages and the disadvantages of a partnership. So what are the advantages and disadvantages of a partnership business? So we start first with your advantages. So the first advantage is ease of formation. So it can be easily formed, as we said a while back, because again, it can be formed by mere consent of the partners or the parties. So since there is an ease of formation, hence it is less or inexpensive to form. So it is less or inexpensive to form. Why? By mere contract, you can already form the partnership. By mere contract, you can already form the partnership. So unlike in a corporation, you need to have your articles of incorporation and then you need to file it to your SEC. Here, by mere contract, you can form your partnership. Next, we have your uh, security of creditors. So as why is this an advantage over the partnership business? Security of creditors. Because guys, we said a while back uh, that your partners has unlimited liability. So when can we say there is an unlimited liability again? Because again, if ever the cash of the business is not enough to pay the liabilities, what do we do? The partners must invest additional amount to pay the liabilities. So this shows the unlimited liability of the partners just to pay the liabilities or the creditors. Okay? So there is a security of the creditors due to the unlimited liability of the partners that in case the cash is not enough to pay the liability, the partners must invest so that the liability will be paid. Unlimited liability of the partners and security of the creditors. So dito, unlimited liability of the partners. Dito naman, security of creditors. Next, close supervision of activities. Why is close supervision of activities an advantage of your partnership? Because unlike in a sole proprietorship, we only have one owner, right? One owner. So since there is one owner, it is hard to supervise the whole business because we're just one. However, if you have a partnership, there are two or more persons. There are two or more persons or partners who can supervise the business. Therefore, there will be a closer supervision of the partnership activities or the business activities through the different partners. Next, we go now to your disadvantages. So, what are some disadvantages of the partnership? First, of course, is the personal liability. While the security of creditors is an advantage, on the part of the partners, personal liability or the unlimited liability is a disadvantage. Okay, so the disadvantage is as to the partners, the advantage is as to the creditors. Because again, you can already make liable, or uh, the partner can be made liable out of the excess, or even if kulang yung capital niya, magiging liable pa rin yung partner. So here, again, we said once we try to liquidate the asset, we have your cash, we pay first your liability. If it's not enough, the partners must invest. So here we have your unlimited liability, or the personal liability of the partners, even at their personal capacity. So here kasi, you do not only make the partnership liable, but also you make the partners liable. So personal liability. So not only the partnership is liable, but also the partners. Next, limited life. So why is limited life a disadvantage? Because unlike other forms of business, such as your corporation, it can stay perpetually. So ngayon kasi our corporations has a perpetual existence, meaning it does not have a particular term to live, unlike a person in which you can only live for a certain time. A corporation has a perpetual existence, so that one means it has an unlimited life. While your partnership has a limited life. Why does it have a limited life? Because again, it can easily be dissolved. Easily be dissolved, easy dissolution. Okay? So it can be easily dissolved. So once it can be dissolved, what will happen? Of course, the partnership will cease. The partnership will cease and a new partnership will arise. So that's one disadvantage. Another disadvantage is the divided authority among the partners. So a while back, one advantage is a close supervision of activities, because you have two or more partners who can supervise the business. But another disadvantage, or contrary to this close supervision, is the divided authority. Because here, instead of one authority, there is a shared authority in between the partners. Okay? Unless, guys, we have a managing partner. So what is a managing partner? A partner who manages the partnership business. So in case there is a managing partner, then there is no divided authority. Okay? So since there is a divided authority, and there is also a constant likelihood that there will be a disagreement between the partners because of this divided authority. Okay? So although advantage is a close supervision, contrary to this advantage is the disadvantage that there is a divided authority, which can lead to a disagreement between the partners. Okay? So some advantages and disadvantages of the partnership. We go now to your kinds of partnership. So what are the kinds of partnerships? So first, we have your as to activity. So when we say as to activity, the main course of the business. Main course of the business. So we have your trading partnership, and then we have your non-trading. If the partnership is trading, it either manufactures or buy and sell goods. If that is a non-trading partnership, it is purely for service. Okay. So as to activity, kind of partnership, we have your trading partnership, manufacturing or buying and selling of goods. Non-trading, we have your service, pure service. Next kind of partnership, we have your as to object. We have your universal partnership of all present property. We also have your universal partnership of all profit. Okay. So what do we mean by universal partnership of all profit? When we say universal partnership of all present property first. Universal partnership of all present property, the object here is the properties of the partners. So let's say partner A and partner B. Whatever are the properties, whatever are the properties of A and B are the objects of the partnership, meaning they will be contributed to the partnership. Okay? So kung ano man yung properties ni A at ni B, mapupunta yan sa partnership. Dito naman sa universal partnership of all profit, we have your A and B. What is included in the partnership or the object of the partnership is the profit. So whatever is the profits of A or profits of B, it will be placed or contributed to the partnership. Okay? So all present property, all properties of the partners at the time of partnership will be placed into the partnership. While in your profit, all profits of the partners will be placed or contributed to the partnership as the object, present property, and all profit. Next, we have your as to liability of partners. So we have already discussed this a while back. Normally, a partner has unlimited liability. Okay? Normally, a partner has a unlimited liability. So what if we have a partnership as the liability of the partners? What do we call those partnership? So we have your general partnership and we have your limited partnership. Okay. So when we say general partnership, all partners are general partners. All partners are general partners. So when we say general partners liable up to the extent of its personal assets. So we've already discussed this a while back. So instead of the partnership only being liable, even the partner is liable. So even the personal assets of the partner is liable over the liabilities of the partnership. General partnership, all partners are general partners. Next, we have your limited partnership. In a limited partnership, at least one partner is a limited partner. So paano yan, sir? Pwedeng one general partner, one limited partner. Pwedeng two general partners, one limited partner. But at least there is a limited partner. So there can be three general partners and one limited partner. As long as there is a limited partner already in that partnership, we call that limited partnership. So what is the difference of your general partner and a limited partner? A general partner is liable up to the extent of its personal assets, while a limited partner is only liable to his or her contribution in the partnership. Meaning, this limited partner is not liable up to his personal assets. So, hindi siya liable up to his personal assets, meaning only up to his contribution. In your general partner, it is your contribution plus personal assets. In limited partnership or limited partner, only the capital contribution, only the contribution, not the personal assets. Again, general partnership, if all partners are general partners. Limited partnership, if one partner is a limited partner, at least one is a limited partner, we call that a limited partnership. Next, we have another kind of partnership as to duration. So as to duration, we have your partnership at will, and we have also your partnership with a fixed term. Okay? Partnership at will and partnership with a fixed term. If that is a partnership at will, there is no specified term, no specified term in the partnership contract. So here, it can end anytime. It can end anytime based on the will of the partners. So if ever the partners wants to end already the partnership, they can do so if that is a partnership at will. Because we talk here about the duration. So when we talk about duration, when do we end the partnership? When do we end the partnership? So if that's partnership at will, anytime you can end the partnership. How about if ever that is partnership with a fixed term? How about if that is a partnership with a fixed term? So if that is a partnership with a fixed term, the term is specified in the partnership contract. The term is specified in the partnership contract. So since the term is specified in the partnership contract, what happens here? You cannot just end the partnership because you like it. You can only end the partnership based on the term provided in the partnership contract. So let's say it was included in the partnership contract that the partnership will be doing business for at least 10 years. So after 10 years, it can already terminated. It can be terminated. So 10 years lang. So hanggang 10 years lang natin pwedeng gamitin yung partnership. After that, we cannot already make use of it because it is based on a fixed term. Sir, what if it is extended? Can it be done? Yes, it can be extended. It can be extended. It doesn't mean that if the term happens, it will automatically terminate the whole business and you cannot make use of it again. You can, again, make use of it by, of course, extending the term or renewing the partnership contract. So as to duration. Next, we have your as to representative to others. We have your ordinary partnership. And then we have your partnership by estoppel. So what is an ordinary partnership? An ordinary partnership is an actual partnership. This is an actual partnership. So you represent your partnership as a true partnership to others. So as representative to others, again, you represent your partnership as a true partnership to others. How about a partnership by estoppel? So this one is not an actual partnership, but represents to others as a partnership. Not an actual partnership, but represents to others as a partnership. So what happens here? In an ordinary partnership, you are an actual partnership. And third persons believe that you are an actual partnership. No problem here because you are really an actual partnership. Here, there is no partnership. However, in third persons, you say that there is a partnership. Clear? Okay, again, there is no actual partnership. No actual partnership, but the third persons, you say there is an actual partnership. So in case the third person relies on the assumption that there is an actual partnership, the actual partnership represented is a scope to deny that partnership. So ganito, 'di ba? Walang actual partnership, pero yung third person naniwala na may actual partnership kasi nga sinasabi mo na may partnership. So parang sinabi mo, ikaw parang okay yung kredibilidad mo naman. Sabi mo, "Oy, napakalaki ng bahay namin, 5 palapag." Naniwala naman yung lahat na 5 palapag nga yung bahay mo. So yung third person na yon naniwala na 5 palapag yung bahay mo. Ngayon, pagka nagkaroon ng liability because of that 5 palapag na sinabi mo, you will stop, you are stopped to deny na wala kang 5 palapag na bahay kasi nga naniwala yung iba. So same as true here. There is no actual partnership, but you let other persons or third persons know that there is actual partnership. And because of that belief or assumption or reliance over that representation, then you are stopped to deny that partnership. What do you mean by stopped to deny? You are not permitted to deny it. Kasi nga sinabi mo, naniwala siya dun sa sinabi mo. So hindi mo pwedeng i-deny yung mga pinagsasabi mo kasi sinabi mo nga siya. Okay? So that is partnership by estoppel. You are estopped once you represent to others that there is a partnership, but there is no actual partnership. You are estopped to deny the partnership. Partnership by estoppel. Another class of partnership, number 6, we have your as to legality of existence. So when we say legality of existence, whether they comply with the requirements of the law. Okay. We have here your de jure and de facto. De jure and de facto. So in your de jure, we have here a partnership which complied with all the requirements. Okay? A partnership which complied with all the requirements is known as your de jure partnership. A de facto partnership is a partnership which did not comply or which failed to comply, which failed or did not comply with the requirements of the law. Okay, so a while back we have your as to representative to others, whether you represent yourself as the actual partnership and you are the actual partnership, or you represent yourself as an actual partnership but there is no actual partnership, right? Now in your number 6, this is whether you are actually existing or not based on the requirements of the law. So if you complied with all the requirements of the law, you are known as de jure partnership. If you did not comply with the requirements of the law, you are known as your de facto partnership. Next, we have your last one. We have your as to publicity. Okay? So when we say as to publicity, whether the partnership is known or not known. So whether it is known or not known to other persons or to the public. Kasi nga, as to publicity. First, we have your secret partnership. And then we have your open partnership. Halatang halata naman na, di ba? Pagka secret partnership, since secret yan, edi not known. Okay? It is not known or not made known to the public. If that's an open partnership, the existence of partners or the partnership is made known to the public. So this is made known to the public. So as to publicity. So we discussed 7 items of classes of partnerships or kinds of partnership. First, as to activity, this pertains to the normal course of the business. If that is for manufacturing and sale or buy and sell of goods, we call that trading. If purely services, we call that non-trading. Now, as to the object of the partnership, it means what are the items contributed to the partnership? We have your universal partnership of all present property and universal partnership of all profits. If that is all present property, what is invested to the partnership is the present property. So all properties of the partners are placed into the partnership. This normally happens during a wedding. So in case there is a wedding, there is a conjugal partnership. So that conjugal partnership means that all the properties of both the husband and the wife is placed to a common fund. So we have that universal partnership of all present property. How about all profits? The present property was not included in the common fund. What will be included is the profit of those properties. So any profits earned out of those properties during the partnership term is included to the common fund. Okay, universal partnership of all profit. Next, we have your as to liability of the partners. So here we need to learn whether they are liable up to the extent of their personal assets or not. So we have your general partnership and limited partnership. We said a general partnership is composed of all general partners. Since they are composed of all general partners, it means that the general partners are liable even up to the extent of their personal assets. While in a limited partnership, it is composed of at least one limited partner. So meaning there can be two or more general partners, but there is at least one limited partner. So it can be three general partners and two limited partners, or four general partners and one limited partner. So here in limited partnership, there is a limited partner, and a limited partner is only limited up to the extent of his capital contribution and cannot be extended over his personal assets. So only up to his capital contribution. And then we talk about as to duration. So how long will the partnership exist? So that can either be at will or with a fixed term. So if that is a partnership at will, it will only exist based on the wills of the partners. So whether it starts now and ends tomorrow, that can be because it is based on the decision of the partners. So anytime they can dissolve or end the partnership. How about a partnership with a fixed term? A partnership with a fixed term is a partnership in which the term is placed in the partnership contract. So since the term is placed in the partnership contract, you cannot dissolve the partnership before the term of the partnership. Next, we have your as to representative to the others. So whether you represent yourself as a partnership to others or not. So we have your ordinary partnership. You represent an actual partnership and there is an actual partnership, no problem. In a partnership by Estopel, you represent that there is a partnership, but there is no actual partnership. And third persons believe that there is an actual partnership because of that reliance over your assertion that there is a partnership. You are estopped to deny the existence of that partnership. Therefore, you are now liable. Next, we also have your as to legality of existence, whether they complied with the requirements of the law. So we can either have de jure or de facto. In de jure, you complied with all the requirements. In de facto, you did not comply with all the requirements or you failed to comply with the requirements. And last one, have your as to publicity to others, whether the partnership is known or not known to others. If it's known, then that is an open partnership. If that is not known, then that is a secret partnership. So we're done now with the four topics regarding your introduction. We have already discussed the definition, the disadvantages and advantages, and the different types of partnership. And we go now to our last topic for this particular topic. We have your kinds of partners. Kinds of partners. So first we have your as to contribution. So remember, what are the contributions in a partnership that can either be a money, property, or industry? So what do we call a partner who provides for money and property? What do we call a partner who provides for industry? And what do we call a partner who provides money, property, and industry? Okay. So we have here your capitalist partner. Capitalist partner. A capitalist partner provides for money or property. We also have your industrialist partner. An industrialist partner provides only for industry. So when we say industry, that can be your skills, your knowledge, your work, your industry itself. Okay. Next, we have your capitalist industrial. Capitalist industrial. So when we say you are a capitalist industrial, you provide for money, property, and industry. Okay? So if it's money, property only, capitalist. Pure industry, industrialist. Money, property, and industry, capitalist, industrialist. Okay? Capitalist, industrialist, partner. Next, as to liability. As to liability. So remember, we have here as to liability to its personal assets. We have two types of partner that can either be a general partner or a limited partner. So general partner or limited partner. So if that is a general partner, the liability extends even to its personal assets, even to its personal assets. If that is a limited partner, the liability only up to his extends only to its capital contribution. Okay, so you have your capital contribution and personal assets. For general partner, both. For limited partner, only the capital contribution. Next, we have also as to management. So when we say as to management, who manages the partnership? So we have your managing partner, and we have your silent partner. So a managing partner, of course, is the one who take charge, or manages the partnership. While a silent partner is one who has no active part, who has no active part in the management of the partnership. Okay? One who has no active part in the management of the partnership is known as your silent partner. And we also have your other classifications. Other classifications. First, we have your liquidating partner. So if you are a liquidating partner, you are only in charge in the liquidation of the partnership business. We also have a secret partner. A secret partner is not known to third persons as a partner. Not known to third persons as a partner. We also have your dormant partner. When you say you are a dormant partner, you are not active and not known. Not active and not known. So, ano siya? Both silent and secret. Kasi nga, not active siya at not known. Pagka known ka, pagka known kang partner, of course, you are a partner in the partnership. Alam nila na partner ka. Pero pag that known ka, you are a secret partner. So you're like an open partnership if you're known, not known, a secret partner. Okay. So what if you don't manage, you are known as silent partner. What if you do not manage and you are not known? You are known as a dormant partner. Wala kang ginagawa at all. Okay? So you are not active, at the same time, you are not known as a partner. And then we also have your nominal partner. Nominal partner is also known as your ostensible partner. It's also known as your ostensible partner. So when we say you are a nominal partner or an ostensible partner, you are a partner whose name is used in the partnership. Okay? So name is used in the partnership. So here, you are not actually a partner. So you are only used as a partner. So it's like a partnership by SFL. Actually, you represent yourself as a partner, but you are not a partner. partnership by Estopel. Naalala nyo yun? Okay. So here we have also a nominal partner or ostensible partner. Here, you are only partner in name. They use your name for accommodation or for consideration. So your name is used in the partnership. So you are subject to a liability as an estoppel partner. As an estoppel partner because you made use of your name as a partner. Okay. So these are the classifications of a partner. First, we have your contribution. We have capitalist, industrial partner. And then we have your as to liability, general and limited partner. So general partner, liability both on your capital contribution and personal assets. Limited partner only to capital contribution. As your management, we have either your managing partner or silent partner. Managing manages the business. Silent does not manage or does not have any active part in the business. And then we have your other classifications. We talk about your dormant partner, which is a silent partner at the same time a secret partner. So it is not known and at the same time not active. And a secret partner, which is a not known partner, liquidating partner who only take charge if there is a liquidation. And then we have your nominal partner or ostensible partner, a partner in which the name is used only as a uh, co- participation or accommodation or consideration. However, it is not an actual partner. It is subject to estoppel, subject to estoppel. So we're done with our introduction. We talk about already the four items, the definition, the disadvantages and advantages, the kinds of partnership, and the classes of partners. So for next meeting, we formally start with the partnership operation and then possibly start with partnership operation also. So formation and operation for next meeting.